Hey everybody, Tony here with the third lesson for this week. I'm going to be talking about Confluence in the market, how to spot it, and what exactly it is and how you can use it in your trading effectively. So if you're not familiar with what Confluence is, essentially it's when you combine more than one, technique or indicator to generate a thesis or identify a potential direction for a stock, and they aid in buying and selling, buy and sell signals, and the stock market's a game of probabilities, and using things in confluence with one another are way to take high probability entries, or look for high probability exits in terms of a few different things are adding up. It may be time for me to exit this position. So I want to run through this AMD chart. And also I use Confluence with my supply and demand zones. So you can see our demand zones drawn here on AMD. And this is just MACD, and on the bottom here is stochastics. So I'm going to show you how you could have potentially spotted some confluence within this AMD chart using supply and demand. So you can see here from the 18th of April, we set demand in and actually get a back test the following day, the following morning, and bounce right out of that demand level, which essentially confirms this demand zone. We can see using MACD that right when we get this bounce right here, what time is this? Like 9:45. We get a cross in our MACD, which propels us out of this zone. Yes, MACD is a lagging indicator, but in real time, you could have identified, these MACD lines look like they're about to cross over. We know a cross to the upside on MACD is almost always pretty bullish and will, at least for the short term, propel the direction of a stock. So what happens? We get this move back into demand, and the confluence with the move into demand, MACD, and then stochastics that I'll show you here in a minute propel this stock in an upward direction. If we go look at our stochastic indicator as well, we can see that around that time we begin to curl on our stochastic, and we get a crossover on our stochastic as well as right when we're getting a crossover, or right before we get that crossover on MACD. So we have a lot of confluence or multiple indicators, multiple pieces of analysis on this chart that are there to, have a light bulb go off in our head like, we entered demand and these both look like they're about to cross. We know if they cross, that propels us out of this demand zone. So, we need to be able to identify that in real time. And we see that, in fact, we get a cross on the stochastic and MACD indicators and a bounce out of demand. Now, there's some other points in this chart as well where, we top out here on AMD. We get a cross in our stochastic or our MACD. We also are getting a cross in our stochastic that is propelling us to the downside. Another thing to note, which is important on MACD, when we go positive to negative on MACD, that's a negative catalyst for a stock. Or if we go negative to positive on the MACD, like we did here, you can see we curl up. That's a positive indicator or indication for a stock. So you can see here, like I was saying, we get a cross on our MACD, a cross on our stochastic. We were already overbought. We work our way down, we go positive to negative, we have the cross, and that propels this move down. Confluence is essentially, you can use confluence with, are you in a bullish formation and you see an uptick in volume towards the top trend line? That's indicative of a potential breakout. But I love to use or you can use them off trend lines, off an EMA. Do we see a move off an EMA? It looks like we're about to bounce. We also get a curl with our stochastic and MACD. Good chance that, we make a move off the EMA. There's a bunch of different ways you can use confluence, and I want to keep this first part simple in terms of essentially you're looking for, whatever indicators you're using, volume, supply and demand, EMAs, you're just looking for multiple things to align with one another to give you insight into potential direction, no matter if it's bullish or bearish. So that's what Confluence is essentially, and I just wanted to illustrate that with the MACD and stochastic indicator as well as our supply and demand zones. I'm going to talk about next week other forms of Confluence, how you can use them in formations, how you can use them off trend lines, EMAs, and then ultimately I want to wrap this up in how you can use Confluence very effectively with supply and demand zones. So, and I'll show you what I personally use. So that's the first part of this Confluence lesson. I really hope this helps. If you have any questions at all, please reach out to me and I will get right back to you. Thanks, guys.